We've been through boom and bust cycles before. What have you learned from that? What do you apply from previous experiences to what we're seeing today?
Oh yeah, well, this too shall pass, right? So boom and bust is exactly what you said. Things get exciting. I think you're seeing some of that in the vibe, right? When you're trying to parse through the daily earnings and whatnot, make sense of it all in this confusing data environment. And during a boom, things can get a bit out of hand. The last one that we really have to look at is 2000, the dot-com boom, and it did bust in the end. The thing I want to clarify for people is that the cyclical component of our outlook in the long leading index, I'm talking about a very specific leading indicator that we maintain, it turned down ahead of the bust in the NASDAQ in 2000. So there are signs to watch for. I'm not predicting anything here, but I'm watching the cycle indicators closely. So far, so good. They look pretty good right now.
I think one of the, we know the Federal Reserve is looking at inflation, it's looking at the labor market, maybe a little bit more on the labor market here. But I was just chatting with Tom Keene earlier, and I was saying the consumer seems like really resilient out there. I know there's a K-shaped economy. People are talking about there's a lot of folks out there struggling, but boy, you look at retail sales, you look at some of the commentary from the banks over the last few days.
Yeah. Well, the K is the aggregate, right? It's the lower income, which is stretched and feeling strain. I'm not giving up on that. But when you add it up with people who have assets that are inflating, these aggregate numbers are perfectly fine, which is why back in April we said, there's no hard landing. I mean, everybody went on that side of the boat, and we didn't go there. I think that was the right call. I think it continues to be the right call. I also heard you talking about corrections, right? What's a real correction? At 5%, hey, that's a walk in the park. I'm looking for 10. Yeah. On a bust, it's bigger than that. We just don't see anything cyclically giving us a warning sign at the moment.
With the Fed speakers, we're interested in Fed policy, interest rate policy. Are interest rates as significant a driver of what you're talking about as in years past?
Yeah, they are important. I think they're a little less important in a boom environment, right? When you're doing this massive spending structurally underneath, I don't think that decision by these hyperscalers is largely impacted by if the rate is a quarter point higher or lower. I think for the lower end of the K, it means the world, okay? So for people on the street, that interest rate component is very, very important. For the structural drivers of the economy, much less so.
Oh, can I ask you real quick the path ahead for interest rates? Just give me a real quick answer.
I think to the downside, because we've been very constructive on inflation. There's no inflation spiral here in the United States at the moment. So that gives them, regardless of the labor market focus or what else, room to ease.